Mathematics is how it all works. Don't worry. I'm not going to be discussing the theory of the universe. The statement is true, however, so do the research if you're curious. I am going to be discussing ROI, or return on investment. I'm going to explain that by using several opportunities as examples so you can see the different calculations. And I want you to understand right up front that the investment can be passive or active. My name is Steve Pollitt. I'm an independent Beamer distributor, real estate investor. Largo, Florida is where my home is. stevepollitt@gmail.com. Text 727-224-4743. That is my direct line. You can text me, you can call me. You're probably going to get voicemail, but you can call me. And my website for my health-related business is healthrewardsnow.com. So, let's do a return on investment comparison. Which is best? Let's say that you have $6,800 in a bank CD. Current rates are the most you can get is 1.5% on June 3rd, 2016, based on my research on the internet. That would earn you a whopping $102 a year. $102 for your $6,800. Now let's look at an alternative. You can buy one of my turnkey houses, which is a do-it-for-you program, and earn 12% net on your money. Notice what the bank was paying you. This turnkey program is secured by the asset, meaning you have the deed, you have the promissory note that's already paying. The difference is you're going to need $30,000, maybe $25,000, maybe $40,000, depends on what house you pick. But regardless of the price point, you will earn 12% net on your money. Let's look at another alternative. You can fund $5,000, which is a minimum, receive the initial capital back, or receive the $5,000 back in 60 to 90 days. Then in about 60 to 90 days after that, you can earn $1,000 a month for each of the $5,000 invested for 15 years. What is the ROI on that? Remember, you got your initial investment back already. So there is no ROI calculation because you have no money invested and your initial investment has been returned to you and now it's earning money for 15 years. It's incredible. So which is best? Well, let's look at another example. Here's a active investment. The other three were passive investments. Fund $6,800 into an income-producing asset. Now, if you'll notice, I used that $6,800 again, purposely. And in this case, I'm suggesting you could earn $4,000 in 6 months. The return on investment is 58.8%. Now, that's for 6 months. This is not passive. There's sales involved in order for you to earn the $4,000. Some people have made over $10,000 in 1 month. That's not typical. That's why I said 4,000 in 6 months. I feel that's a very conservative estimate if you work with me on how to do that. Just recently we announced there's a zero investment option. So you wouldn't have to fund $6,800, a lot less, and actually it would end up being zero very, very quickly for you, and I can show you how that works. But for now, use this as an example because the ROI is 58.8%. And by the way, if you had to borrow the $6,800 using a credit card at a high rate, let's say 18%, you would still earn 49% in 6 months if you earn $4,000 during that 6-month period. Again, 6 months times 2 is your annual return. So, all the examples on the previous slide are passive with residual income. The only one of these examples I personally would exclude is the bank CD. The example above is an active investment with a huge residual opportunity. And I could explain the residual opportunity to you when we explore that in greater detail. So, all these examples are real. In business, there are risks involved with every opportunity. contact me for more information. I will review the relevant risks for the examples covered today. My contact information, Steve Pollitt, stevepollitt@gmail.com, 727-224-4743. I hope you like this.